Gold closed last week above $4,661 an ounce. Silver closed above $69, up more than 6% in 5 trading days. That's an enormous week for both metals. But if you think the story is already written, I want to stop you, because this coming week is arguably more important than the one that just ended. It contains a specific data collision on Thursday that could determine how the entire market reads Friday's Jackson Hole speech before Fed Chair Kevin Warsh even opens his mouth. Quick disclaimer. I'm not a financial advisor. This isn't a recommendation to buy or sell anything, and both metals have shown real volatility in both directions this year. Before we move any further into today's topic, I want to recommend something that I genuinely believe can be valuable, especially if you're serious about understanding precious metals, whether you're a complete beginner or an experienced investor. The book is called The Precious Metals Trap. I highly recommend giving it a read, because it goes beyond simply telling you what gold or silver is worth. It helps you understand the psychology, risks, common mistakes, and hidden traps that can influence precious metals investors. And honestly, the more you understand the market before making decisions, the better positioned you are to recognize opportunities and avoid costly mistakes. So, if you're serious about improving your understanding of gold and silver, check out The Precious Metals Trap and consider picking up a copy, link in both the description and the pinned comment, so make sure to check it out. With that said, let's get back to today's topic. Quick recap of how we got here, because it sets up everything this week. Last Wednesday, the U.S. Treasury announced it was significantly expanding its long-end bond buyback program. Under normal circumstances, that pushes yields down. Instead, the 10-year yield closed the week at its highest level in 20 months anyway, and the national debt crossed $40 trillion the same day. Traders read that combination not as strength, but as eroding confidence in U.S. fiscal footing. And that debasement trade reading sent gold, silver, and Bitcoin all sharply higher together by Friday's close. That's the backdrop this week opens, with a market already leaning toward the idea that something structural, not just cyclical, is happening to confidence in the dollar. Now, here's the actual calendar for the week ahead, because watch this before the week ahead needs real dated events behind it, not just vibes. Monday opens quietly. Tuesday brings the Conference Board's Consumer Confidence Index and new home sales. Wednesday brings ADP's weekly employment data. None of those are nothing, but none of them are the main event either. Thursday is where it gets genuinely interesting, because 2 significant releases land on the same day, pointing in different directions. Core PCE, the Fed's preferred inflation gauge, is forecast to accelerate to 0.3% for the month, which would be a hotter print than recent readings. On the same day, second quarter GDP is expected to be revised lower. Hot inflation and slowing growth landing together on the same morning is about as close to a textbook stagflation signal as a single day-to-day gets. Also Thursday, initial jobless claims, giving one more read on labor market health right before the week's biggest event. That pairing matters enormously for how Friday gets interpreted. If Thursday actually delivers a hot PCE print alongside weaker growth, it hands the Fed's 3 known hawks, the officials who already dissented at the July meeting, wanting an immediate hike, real ammunition, heading into Warsh's remarks the very next morning. If PCE comes in cooler than feared, despite the growth downgrade, it reinforces the disinflation narrative that's been driving the hold or cut case all month. Either way, Thursday's data lands less than 24 hours before Warsh speaks, which means the market walks into Friday morning already repricing based on Thursday's numbers before he says a single word. Then, Friday itself carries 3 separate events, not just one. Warsh delivers his first Jackson Hole keynote as Fed Chair, his first appearance at this specific venue since taking office on May 22nd. On the same morning, the Bureau of Labor Statistics releases its preliminary annual benchmark revision to non-farm payrolls, which could reveal that previously reported job growth was meaningfully overstated or understated. A revision like that can quietly reshape the entire picture of how strong or weak the labor market actually was this year. And the University of Michigan releases its final August consumer sentiment reading following a preliminary figure that had already fallen sharply to 51.0 from July's 55.2, with year-ahead inflation expectations rising to 4.3%. 3 genuinely significant releases, one morning, right as Warsh steps to the podium. Here's the honest, two-sided read on Friday itself. Warsh has been deliberately avoiding explicit forward guidance since taking office, which means the market has no established policy record to anchor his tone against one trading desk's own weekly note on this exact week, described it plainly as two-way risk. If he leans into the disinflation and debasement trade narrative that's dominated the past 2 weeks, that's historically the kind of environment that's extended gains in both metals. If he instead leans on the three dissenters' hawkish case, especially if Thursday's PCE print gives him more ammunition to do so, that would push rate expectations back up and could pressure both metals, possibly within minutes of him starting to speak. There's a real historical parallel worth knowing, and I want to be precise about which year it actually happened in, because it's easy to blur. At the Jackson Hole Symposium in August of last year, then Chair Powell indicated that changes in the economic outlook might make adjusting the Fed's policy stance appropriate a clear dovish signal. The dollar dropped sharply afterward, and gold and silver both surged, closing that week at meaningfully higher levels. That's a real dated precedent for what a dovish Jackson Hole speech can do to these metals. But Warsh is not Powell. This is a different chair with a stated preference for structural framing over near-term signaling. And the specific data landing the day before his speech this year is genuinely more mixed than it was heading into that prior speech. So here's what I'd actually watch, concretely, as this week unfolds. First, Thursday's Core PCE print, specifically a 0.3% or hotter reading, alongside a downgraded GDP figure, is the stagflation-shaped outcome that would hand the hawks real weight heading into Friday. Second, whatever tone Warsh actually strikes Friday morning, watching in particular whether he addresses the three dissenters' case directly or stays deliberately structural, since even the choice to stay vague is itself a signal. Third, the non-farm payrolls benchmark revision landing the same morning, since a meaningfully overstated prior labor market could shift the entire growth narrative independent of anything Warsh says. And fourth, the final University of Michigan sentiment number, since a further deterioration from that already weak preliminary 51.0 reading would reinforce concern about the consumer independent of Fed policy entirely. I'm not telling you gold and silver keep climbing through this week. And I'm not telling you they reverse both are genuinely live outcomes depending on how Thursday's data and Friday's speech actually land. And anyone promising certainty about either is guessing. What I am telling you is that this week contains a specific dated sequence, a stagflation-shaped data pairing on Thursday, followed within 24 hours by a new chair's first major address, 2 additional significant releases the same morning, and a real historical precedent for how dramatically a Jackson Hole speech can move these two metals. Tell me in the comments, do you think Thursday's data hands the hawks more ammunition, or does the disinflation story hold up? And once Friday wraps, I want to know whether you think Warsh's speech confirmed the market's current lean or pushed back against it. I read these, and I'll be back the moment his remarks are out to walk through exactly what was said and what it means for both metals. If this helped you walk into this specific week with a clearer sense of what's actually landing and when, subscribe. This is a real, dated sequence worth tracking day by day.